Good afternoon, everyone, and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host, Banjo Blake, and next up we have Webcentral Group. Webcentral Group is Australia's largest full-service digital services provider for small and medium businesses. Webcentral has roots in domain name and hosting, and is a small to medium enterprise digital marketing experts who catapult growth by helping businesses get online, improve, and protect their online presence. I'm joined today by Webcentral's Managing Director, Joe Demase. Joe has been with Webcentral since October 2020, helping capitalize on growth despite the COVID pandemic. Welcome to the conference, Joe, and I'll hand over to you when you're ready.
No worries, thanks very much. Hello, everyone. I've got with me Glenn Diamond, our CFO, if my voice crashes or if you have any finance questions. Webcentral we originally started out as 5G Networks, a listed telco in 2017, and we did the acquisition in 2020 of Webcentral, and then as a part of consolidating the two entities and completing the merger, we changed our name to Webcentral Limited. So I guess there's two parts of the business. There's our direct or retail part of our business, which is about 330,000 customers. We've got over 600,000 domain names under management. We also provide website hosting, a website builder, and we offer email services, both Office 365 and our own email solutions. That's all supported by the 5G Networks infrastructure, which is 4 data centres around Australia, over 100 kilometres of fibre optic cable installed into predominantly Telstra ducts that connect up over 60 data centres, 60 of the major data centres across Australia. And we have our own private cloud infrastructure. So we compete with the likes of AWS and Azure. We do have clients on public cloud. So there's a little bit of a mix and match there, depending on how it suits that particular business. And just to break out some of that, the other areas, we do sell hardware and software to our clients. It's a lower margin, some of our core products. And we have a digital marketing business as a part of the retail part of the business as well. So we cover enterprise, government. We also wholesale our infrastructure services. And then we've got the direct part of our business. So top line is around 100 million of revenue. And this year we were 17 to 18.5 million EBITDA, excluding sort of any acquisitions or share-based payments. If I just talk about the announcement that we put out today, so year to date 11.1 to the end of March, with a March monthly exit run rate of 1.5 million EBITDA. So we're expecting that to grow. Our net cash exiting for the month of March is 1.2. We've exited some properties, so that all kicks in April. We've also exited a number of third-party data centres and moved that infrastructure into our own data centres. And there's continued ongoing savings and efficiencies as we migrate and still consolidate some of the acquisitions that we've done over the last 4 years. So I think we're up to number 12 now. In March of this year, the governing body launched .au, so you can have webcentral.com.au and you can also have webcentral.au. So far, we've sold over 18,000 domains through to our existing customer base. So eligibility around that is about 380,000 customers have a .com or a .net.au, and they're eligible for the .au. We're doing a lot of marketing, and the industry as a whole is campaigning and educating the market around the .au and what it means and why you need that. So just to give you a couple of examples, the Australian government come out and said from a security perspective that by owning the .au as well as the .com.au, you're protecting yourself against fraud or security issues. So we think that's a real driver. Obviously, there's IP and trademark benefits around keeping the .com.au. You wouldn't want someone else coming out as sort of NWR communications.au and then start competing for for that customer base or that business, or promoting themselves as a premium PR organisation. And then I guess a little bit about our own story and the benefits we've found with .au. So to support the industry and really promote the .au, we changed our domain name from webcentral.com.au to .au. And as soon as we did that, we've seen some of our organic search. So when you go into Google and you search domain names, organically we will rank really high as the webcentral.com.au. We also promote our services with Google search. But what we've seen is that .au, that organic search crashed significantly because all of a sudden Google had to find us again. They'd lost who we were and our domain, and they had to find us again. So it took about 2-3 weeks to recover. And now what we're finding is, because Google says I'm searching from within Australia, I'm searching for domain names, I'm going to put the highest ranking .au domain provider as number one from an organic search perspective. So if you're a financial advisor, I strongly suggest buying the .au, changing your domain to .au, because Google will reward you for being an Australian business. And a lot of the searches for Australian businesses are done within Australia, and you will rank well above your competitors. So three really compelling reasons to grab the .au and change your domain name, because it is Australian, and we market predominantly to Australian customers. One of the other things that we've done is a lot of significant changes around our systems and how we operate. We've spoken about that in the past. We've just launched, restructured the way we sell our hosting packages. So normally we'd sell 120 hosting packages a month. We're now seeing that being about 100 packages a day. So with some of the things that we've changed in our cart and have that included in as an option for people who come and buy a .com.au or a .au, then we're picking up them. So we're having roughly 25% of the domain sales. We're picking up the hosting component of that as well. So that's really exciting. It's a real opportunity, a real growth area we see in the business. And it's an anomaly, I guess, that we've been working through to find a solution, because we only host about 8% of the domains on registry, and that industry average is sort of 25 to 30%. So we think that we've found a bit of a secret sauce in that, and that'll kick in obviously through the rest of this financial year. Interestingly, through the combination and combining of the two businesses, we had about 17,000 shareholders on our registry, and looking at the transactions or what was happening in that, and we'd often see maybe 100 or 50 to 100 shareholders leave on a daily basis, had this small unmarketable parcel. So we've been able to reduce our share capital by about 5.4 million shares, I think it is, and we've cleaned up just over 5,000 shareholders. So our registry will drop from sort of 16,000 down to 11,000 now. So we think that will stem some of the sell side pressure that we've seen on the market recently for our business. And again, as a part of our strong cash flow and profitability that we've advised or communicated to the market, we're just going through and reviewing how what's the best way to spend our cash. There's a couple of acquisitions around. We've got a debt facility in place, but we'll look to potentially a share buyback and then just review our options around a dividend policy. And then lastly, our investment in Sirius Networks is about $5 to $6 million. We own about, I think it's 18.4% of the company. So we're just not having a lot of success communicating with the board and gaining interest around completing a transaction there. So we're just reviewing our options there, and I guess we note that Nothing has changed really with the business from a performance perspective over the last 18 months for the results that they've put out. A little bit on the .au, again, the potential revenue is about 9.6 million a year if we sort of get to that 50,000. 50% of our customer base takes up a .au, so that's sort of we're targeting internally about 150,000 domains. There's going to be a big push towards the end of September. So basically, Webcentral can buy the .au and has exclusivity to it because it owns the .com.au. But that exclusivity ends towards the end of September this year. So it's a 6 months grace period, and then anyone can go out and buy a .au. So we think that there'll be a big take up towards that, and as the market really starts to understand, the potential of .au and obviously some of the other things I've spoken about as well. So just to recap on the infrastructure side of the business, so 5 data centres across Australia, 2 in Sydney, a third-party provider in Adelaide, own our own data centre in Melbourne, and our own data centre in Brisbane. We've got IP capacity, over 100 gig of IP capacity in our network, direct connections into LA and Singapore, Tokyo, New Zealand, and all our major capital cities around Australia. So that product that we spoke about, which was the cloud port, which is similar to a Megaport type product, we're launching that. We've offered that as an introductory to our wholesale partners, 1 gig between 2 data centers, 12 months for free. And then for retail customers, and then we're doing some digital marketing around this. It's 1 gig connection between 2 DCs for 6 months for free as well. So what we want to do is get people exposed and experienced with our product and launch that. Then we're also focused heavily on selling some dark fiber between those data centers as well, and continue to expand selling rack space across our data centers where we've got some capacity. So a lot of those products are sort of 80 to 90 points of margin because we've already sunk that capital and they're up and running and they're operational. So lots of upside and very profitable type services. So if I just talk through this, the revenue trajectory and where we're going. So we've got the .au launch. NBN is going to be launched June this year. Hosting I've spoken about, we've got a bit of an increase in hosting. We're starting to see that probably go ahead of where we'd forecast there. So we'll give that a couple more months before we re-look at where we think that growth is going to come from. And then organic growth is really growing our existing base. We've redone some pricing as a part of that organic uplift as well on some of our core products. And then we expect those flow-on effects. So a lot of the time with domain names, people buy those annually. So we couldn't start recognizing revenue until the end of March for those .aus that we've sold. So now we're recognizing that on a monthly basis as that rolls out. So quite exciting period ahead. Again, our EBITDA, we've sort of talking around that 17 to 18.5 million EBITDA for this year. And then we'll talk more about what our EBITDA exit run rate is for June once we get those June results out. But we're expecting that obviously to continue to increase and grow with some of these new products that are coming online, some of the price increases we've done, and some of the other operational savings that we've rolled through. Nearly losing my voice. And then we've just the similar slide you guys have seen in the past around cash. So I think I might just end it there and throw it open to some questions. So yeah, thank you.
Perfect. Thanks a lot for that presentation, Joe. It was great getting a bit of an insight into the .au domain and how it's actually helped you guys expand. Across your various product lines, can you order them in terms of highest growth prospects versus the ones that are more mature and cash generators?
Yeah, so I think for us, it's Domain names about 22, 23 million of revenue a year. Obviously, .au comes on board. We probably see those domain names, .com.aus and .nets, are steady. Our churn, our growth, we're still cleaning up some support and some support issues around some of that churn. But with the .au launch, we're sort of expecting 20 to 30%, depending on how that goes over the next few months, will be sort of where that lands from a domain growth perspective. And then probably the biggest areas around that hosting services. And then for us, it's wholesale. So in wholesale, we're really pushing data center, the dark fiber, and the cloud ports, network services product.
Awesome, thank you. Is the strong performance on the EBITDA despite weaker revenue outcome the result of product mix or better cost management?
Look, it's profitable. Yeah, it's more profitable product sales. Just on that, I mean, I guess, and a lot of businesses are seeing this, is that it's the supply chain and delivery of hardware. We've probably got about 1.5 million of revenue where we've signed the contract with customer, and we're just waiting for that hardware to be delivered. Normally, that would be a maximum 6 weeks. We're sort of now seeing 3 months. So there is a bit of a lag, and we're still a bit uncertain as to when that hardware will come through, and also some of the growth in some of the other products.
Awesome. That's all we've got time for, unfortunately, for this session. Thanks a lot for your time, Joe. Appreciate it.
No worries. Thanks very much.
Thank you.